Aquis listed Coinsilium is a Web3 investor which helps accelerate Web3 and blockchain technology projects for company. Eddy Travia is the chief executive. He joins us now on the line from Singapore. Eddy, good to be able to catch up with you. We've spoken before about this area, but never about Coinsilium. Explain what's going on with Coinsilium, and of course, more importantly, how you're using Web3 and what Web3 is that helps your clients.
Well, Coinsilium, from the beginning, we have been initially trying to expose retail investors to this very exciting sector, which is blockchain, which we believe is still just starting to get developed. And our initial thesis was to be on a public market so that retail investors can follow, can learn about it, and can benefit from through the Coinsilium shares, which are listed on Aquis in London. Since then, of course, we have evolved because we did our IPO back in December 2015. A lot of things have happened since then. We have made several investments, but as well, we have evolved into more a venture builder and as well an advisor to many of these projects in the blockchain sector. And now blockchain, there is a new term, as you were saying, which is Web3. So Web3 has kind of two distinct descriptions in a way, or definitions. On one side, Web3 was initially the next iteration of the internet. So something more open, more transparent, more scalable, a different version of what we call today Web2. So Web2 is basically the internet we use every day, the social media apps, the different fintech applications, and so forth. And Web3, actually, in the blockchain world, Web3 has evolved to become this kind of network of decentralized applications. And when we say decentralized applications, mostly are built on open source and public blockchains, meaning that you interact through, for example, smart contracts, and you interact in a peer-to-peer way, usually. So you interact through smart contracts and peer-to-peer. And for that, you need digital assets on the blockchain, or you need what we call cryptocurrency. So Web3 is basically any application that is using these terms, decentralized applications and open source and digital assets.
I was going to say, how does tokenization fit in with all this as well? Because that's another word that we have to understand how that fits in. And I guess this is all part of this idea that the Web3 technology takes us on to this next generation of integration between all these assets and all these facets of digitization.
Correct. So in a way, you can compare it somehow to what happened a few decades back, which is securitization, which was a way to basically create something virtual like shares into something that can be traded, and which we do every day. And today, if you're looking at the digitization or through tokenization, it basically means bringing assets on chain, so on a blockchain. And these assets could be either securities like shares or bonds, but they can also be tangible assets like real estate, for example. So instead of going through an intermediary step, which is securitizing the real estate funds like we usually do through REITs, etc., now you can imagine a building which becomes tokenized directly, and each token will represent, for example, a part of that building. Now, it can be what we call fungible tokens, meaning that each token is kind of the same as the other. So each of them is an equal part of a building or a vintage car or something, or a work of art. Or you can have distinct tokens, which are called non-fungible tokens. And then you can have distinctions such as this is a room in the building that is maybe more expensive because it's a penthouse or it's a different floor, a different view, etc. And there you can have very, precise, granular type details or that represent kind of the value of this token compared to another token, which we call usually traits or, characteristics. And it's very important because there is right now this trend towards asset tokenization. And when we talk about that, we talk about real world asset tokenization, which is affecting a lot of different industries and which we believe is going to be a major step towards what we call blockchain adoption. The point I wanted to make is that everybody today knows something about crypto. Everybody has maybe bought a Bitcoin or a fraction of a Bitcoin or fraction of Ether, etc. But that's really just the tip of the iceberg. This is not really blockchain adoption. So owning crypto is just a small step in that range. We believe that asset tokenization and Web3 are going to be major, will have a major impact on actual blockchain adoption.
And to what degree does Web3 help us integrate AI into all this as well, which is another massive step forward, which a lot of people, again, don't really understand the application to this. Are you now more engaged with AI because of Web3?
Yes, I mean, of course, in one sense, we are following AI because it's kind of in our realm of new tech and kind of breakthrough tech that we are following. And there have been before a few experiments between AI and blockchain. And of course, this is accelerating now. AI, what I think is very interesting is that it's taken everyone by surprise. It's the speed at which everyone, like the layman, is actually starting to talk about AI. I would say that's actually has come quite quicker than many technologies before. But what is really interesting about AI is that it's actually powered by incredible computational power. And if you look at Bitcoin, which is the original, let's say, the origin of blockchain, Bitcoin, when we talked a few years back, in the Bitcoin network, there were about 250 billion calculations, 250 billion calculations per second, which at the time was already more powerful than most of the supercomputers in the world. Today, we are talking in quintillions. So quintillions is 1,000 times quadrillions, quadrillions 1,000 times trillions. So it's an incredible computational power that is securing the Bitcoin network. And that's already one link with AI, is the fact that to get to AI, and the reason why we're getting to AI now and we couldn't a few years back, is because we need that kind of computational power. And we cannot forget that Bitcoin is the most secure network on the planet. And that's why people are still, I mean, despite everything that happened with crypto last year, Bitcoin price is actually has sustained pretty well. You know, we're still around $30,000 and probably 27 today to be precise, but let's say in the range of $27,000 to $30,000. And the reason why is I would posit is that the computational power behind Bitcoin is so strong that no one believes that actually it's going to fail or it's going to be hacked. So that's one of the points, the touch points with AI, is that there is something there. There is a fact that we need to harness the power of multiple computers to actually power things like AI, you know, multiple servers, etc. So I think in the future, blockchain is going to be one of these networks that powers AI as well, and we'll see a lot of different collaborations between the two. Yes.
Yeah. Let me break this down further for those like me that doesn't really understand the space. You talk about peer-to-peer. That's how you organize the business. Does the business help me as an individual, or are you helping corporates enter this world of digitization, the tokenization, the blockchain and Web3? Where's your relationship? Where do you make money? How do you make money?
Okay, so different questions. As a user, you can of course use Web3 because you're talking about, for example, there are now social media applications where you can control your data. You can own your data. As you know, on Web2, like on different apps like Meta and Twitter and so forth, you don't really control anything and you don't really monetize easily your data. Now with Web3, you can, because you own your data and you can monetize it by selling a service or selling your data through a large number of people. So that's already great. And there is a lot of transparency around, because the blockchain, the public blockchains, means everyone can see the transactions. They are what we call pseudonymous. They're not anonymous at all. They are pseudonymous. Now, that's one way. Now, when we talk about tokenization, this is usually more for corporations at the moment. So you're talking about banks. Like where I am in Singapore, there are a couple of banks like Barclays and DBS, which have already tokenized bonds on the blockchain. And this is happening in the UK, it's happening in the US, all over the world. Now, this is more a corporate kind of B2B type relationships where probably other institutional investors are going to buy these tokens, or the banks and so forth. So that's at this level. Where Coinsilium, if you want to know where we make money, well, obviously we're an investor, so appreciation of the shares or the tokens. I mean, last year we made 5 investments. All of them were in tokens or future tokens. But before that, for example, we invested in a company that is a fintech company that wants to get a bank license further on. It's called GreenGage, and this we have shares, for example. So of course, appreciation of shares, appreciation of tokens, and we sell advisory services. We just acquired a company called Tokenomics, which has like 7 clients and 10 more in pipeline. And what they do is they do Web3 advisory services. So we advise projects that want to come into the Web3 market, sell their tokens, and basically launch their solution, launch their projects. So we also make money from that. So we have revenue generating, and we have more of an investment type activity.
And that investment side presumably matures into returns for shareholders through exits. Is that something that you intend to do sooner rather than later, or are these long-term investments that won't pay for several years?
Well, we have already done some exits, but of course, each investment case is its own, right? So we don't necessarily want to stay too long on each investment. Again, there's going to be a difference between shares because for shares, as we know, it's either a liquidity event like a series B, C down the line. We always go in very early. We all go in pre-seed or seed. We don't usually do series A, B, etc. It means that we take, let's say, a bigger chance in a way because it's very early, but of course it's likely to pay more if it's successful. So that's kind of our model. And this, so in the situation where we buy shares, then we have to wait for a potential exit through a further liquidity event. When it's a token, that's very different because the token could be on sale on an exchange either a month from now or 12 months from now. And then we can decide based on the price and what we paid and the price at which it's trading. So it's very liquid. Token investments are great in the sense it's very liquid. But we usually have a vesting condition that comes with the fact that we come very early and at a low price. So we basically have to wait to be able to sell those tokens. So that's a type of exit. And that's how we have built our cryptocurrency treasury. So we have built a nice treasury in cryptocurrency through our advisory work and our investments. And we have, for example, traded these tokens for cryptocurrencies like Bitcoin or Ethereum, which are likely to sustain a price level over the long term.
Yeah. You're listed on Aquis. Why the Aquis exchange particularly?
Well, to be clear, we listed in 2015. So before it was Aquis. At the time, we felt it was the right partner for us because it was a smaller investment community than, for example, London Stock Exchange, etc. But as well, a bit more flexible for us and somewhere where we could have more direct relation with investors. So at the time, I remember we have done a few meetups in London and so forth, and that was quite useful. I believe the main reason is because at the time in 2015, Bitcoin and blockchain didn't necessarily have good press or were not very well understood. Of course, today it's a concept that is much well understood around the investment communities. So it was fine, and we still like it. We feel that it's the right size for us at the moment, and we hope that Aquis grows in terms of expanding its investor community and expanding its reach. So we're very happy to work with them.
Yeah. Look, when we spoke to IG clients about having you on, there's a couple of questions that came through, which I thought perhaps might be worthwhile just punting those through to you, if you don't mind. One of the clients took a recent placing in Coinsilium. The question is around the Coinsilium investment in Metalink. Given what looks like the potential game-changing nature of this investment, can you provide an update on the latest activity of Metalink, and when do you expect Metalink to conduct a token launch? Quite a lot there.
We cannot really talk about that at the moment because Metalink itself has not set any date. I think what I can give you is a bit more context on this investment in relation to our relationship with Indoors, which is a team that actually has kind of sprung off Metalink. So this comes from a problem, which is interoperability between metaverses. And I think it was a great idea for that team to go there, because there is indeed a problem in the fact that assets on metaverses are not interoperable. So you cannot easily take a digital asset from one metaverse and use it in another. And so that's really the rationale and the reasoning behind Metalink. But we have been working with Indoors since 2017. This is a very strong team, especially on the technical level. And so we are very confident in the resources and talents of that team. Unfortunately, I cannot give you any dates or any plans on token sales and so forth.
No, we understand that completely. One other question was interesting in terms of the outlook and where things are going. And of course, Coinsilium's participation in this, having achieved what's been achieved in the last 10 years. You referenced going back to 2015 with the launch of the shares initially. And of course, the point at which you said Bitcoin was little understood at that time. We've not quite gone into the decade anniversary of that. But how do you see things developing over the next 8 to 10 years? Because we have seen a tremendous amount of progress. Do you see that sort of progress rate continuing?
Yes, but I think what we're all waiting for is for the technology to become a little bit more part of the background and not so much, at the forefront. Because for us, it's fine because we are investing in this space. But as a user, as you were pointing out, as a user, as a business, you don't need to understand how this works the same way we're using internet and all these tools. We don't really need to understand how it works. We just need to use it and get the benefit from that. So I think that's where we see blockchain coming in the next 10 years. As I was saying, until now, the money-making part of the industry has been a lot around trading, crypto trading, and many big actors have been born, and unfortunately, many big actors have failed as well over the last few years. And as I was saying, this is just the tip of the iceberg in terms of blockchain adoption. So we believe that through Web3, which I think will be a very general trend, as well as asset tokenization, which we also believe will be a very general trend, which can go deep into financial infrastructure and really disrupt that financial infrastructure in a way. These are going to be big movements. Of course, AI, which is kind of a newcomer, it's going to affect as well what can be done with blockchain. But really what we want to see is a normalization and also a clarity with regulations. As you know, there's been a lot of feuds going on in the US mainly between the SEC and different companies in this space. And the lack of clarity has been a problem around the world. And so we, for example, are working in Gibraltar because we believe that there is a bit more clarity there. But of course, we have invested around the world, and we hope that all our startups, all the projects we advise and we invest are going to have regulatory clarity. Because despite what we have seen, the vast majority of entrepreneurs are obviously honest entrepreneurs who want to do things in compliance with the rules, right? But the problem is sometimes they don't know what the rules are. So that's something that hopefully will be solved in the next few years. And that will give a new impetus to the whole economy and ecosystem around this technology. And we move into a direction where we use it, we enjoy it, we benefit from it, and everybody will be the better for it.
Yeah. Eddy, on the last question, I just want to bring in a share price chart. To what degree do you think that regulation risk is beginning to be built in here? People don't know, as you say, they don't have the clarity which perhaps maybe they should now be given. And how much of this drop that we see in the share price has really been all about not just market movements generally, because there has been a weakness technically, but also there has been perhaps maybe people have yet to understand this space properly. What do you say to potential investors in Coinsilium at these sort of levels?
Well, I think the first thing I would say is that these levels are in my opinion, great entry levels for anyone who wants to buy shares, because we believe they are, in our opinion, of course, undervalued. We have, as you can clearly see from our chart, we have had our share price has followed to most extent the cycles of this market. We have gone through with Coinsilium two big cycles. The first one was the ICO hype cycle, which happened in 2017 and 2018, where this new technology, the ERC20 tokens, have given way to massive amounts of capital going into crypto projects, and again, more like cryptocurrencies. And then there was a 2021 cycle where we had DeFi, where we had NFTs, we have another series, another wave of innovations. And so basically now, again, the market has gone down because there is always a phase of kind of disillusionment, maybe frustration with the market in general, and the fact that there are interrogation marks. But we are very confident, and we believe that the market will take up again. The crypto prices have not fallen as much as they've fallen before. So, if we're looking at technically at that, we feel confident that the crypto prices will be maintained at reasonable levels, protecting our crypto treasury and, of course, the crypto, let's say, chests of many large companies out there in the world, public or not. And it's again a building time for most projects. Hopefully we are investing in the right ones, and they will support our share price with the news coming in the next few months.
Yeah, look, Eddy, it's a pleasure to be able to catch up with you again. Thanks indeed for explaining the business model and also the environment in which you're trading. But it's been a pleasure. Thanks for your time.
Thank you. Thank you very much.
That's Eddy Travia. He's the Chief Executive of Coinsilium. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.